Hello, everybody, and welcome to another edition of Bleeding Crypto's Market Update. Today is Wednesday, October 6th, and we just finished closing and opening the new daily candle. So I wanted to update you guys. I'm going to try to do this series, if time allows, as closely as possible. If I can do it on a daily basis, great. If not, then so be it. But I want to be able to walk you through step by step on what we've been talking about with Bitcoin. So let me go back to the Twitter chart. Here we go. So here's our Twitter chart, and here's what we've been talking, what we've been following. We have been on a very nice run. Bitcoin's been on an incredible run, very, very bullish. Here's a 12-hour candle, a 12-hour time frame, better said. Here's the daily time frame, so it gives you a little bit, better view of what's going on with the market. So I typically, one of my favorite time frames is the 12, so I'm just gonna kind of go with that one here, just out of habit. So what am I looking at next for Bitcoin? Well, as you know, we have been pushing really nicely. Now, when we push, one of the things that we do is that we do create a lot of movement also on the oscillator. So here's the MACD. Let's take a look for a second where that MACD is. So the MACD, as you can see, has been on a pretty decent run. However, one of the things that I tend to keep an eye on and caution you guys is this separation, guys. This cross indicator to this MACD, it's getting really, really stretched out, and it's not allowing, they're not really running together. When I see this, it brings a little bit of concern because these two usually stay together, and if they don't, what happens is that you get that push back down to that cross indicator before we see a continuation. Now, like the 9 EMA and that we talked about before in previous videos, there's two ways that we can catch up here. There's two ways for us to catch up to the 9 EMA. And we talked about it, and I'll repeat it again. Now, I'm going to repeat a lot of the things that I mentioned before, because one of the things that I have noticed that has helped people in the past and me personally is that repetition. The more you hear it, the more it sinks in, and it just becomes second nature. When you look at these charts, you want to be able to read them as quickly as possible and not have to check off a checklist on a piece of paper, but you kind of memorize this. It becomes just muscle memory. So we talked about the separation between the price action and the 9 EMA. Typically, when you're on an up tick like this, you want to stay as close as possible to that 9 EMA. If not, you risk the price action coming down and hitting that 9 EMA. Same thing with this here. Now, there's two things that'll close this space. One is a small retracement, get us back down to the 9, check it in a continuation, or a consolidation inside of this area, allowing the 9 EMA to catch up, and then a continuation. And we can see that actually right here below. Right below, we had a beautiful push to the upside. This candle here was $3,663.10 for a total of 8.36%. And then 1, 2, 3, 4, 5, 6, 7 candles later, she takes off for another nice move to the upside. Now here we are again. We're separated from that 9 EMA. The way this price action here was separated from the 9. When this was going on, guys, this 9 wasn't here. This 9 was down here, and it slowly caught up, and then the price action continued to go. So I'm hoping that we could stay here and consolidate and allow the 9 EMA. That's the bullish part of me. However, the more reasonable, the more level-headed, non-biased part of me says, you know what? We had a nice breakout. We broke previous swing high. What's the likelihood that this is going to consolidate here and continue up? I would say not as much as a likelihood of this price action coming down into previous resistance, into the previous swing high, and flip it for confirmation. So that's more probable. Now, it doesn't mean it's going to absolutely has to happen. But again, this is a game of probability. So with that mindset, we want to just prepare ourselves for a push to the downside. Now, one of the things about these big moves like this and this here with Bitcoin is that when we do come down and when we break through with such ferocity as this did here, this candle did here, we leave behind an important area of a back test. And when we do that, that drop for confirmation becomes a little bit more violent. So what I mean by that is that this candle topped out at 55,743, and this here is at 52,677. That's a pretty big drop. That's a $3,000 drop. So when you see that, it tends to scare people sometimes when they're not used to that, when they don't know what to look for. When they see a $3,000 drop, which really in essence isn't much after a move that it just did. However, the mindset of new traders, the mindset of new investors, the mindset of people who jump into the market not knowing what to do, this becomes a little bit concerning. For me, not so much. I'm already expecting this. So a $3,000 drop, not that big of a deal. And this will allow the 9 EMA to catch up. It will show strength in the market if we can hold this. If we can't hold this, then we're going to see a lot more downside. So, and that definitely is something we don't want to see, because if we can't flip this area here to support, unfortunately, we're probably going to come down back to 48,000. It's going to give a lot of that move back. And that we definitely don't want to see. That's going to be from the 55,000 down to the 48,000. That's a $7,000 drop. That's pretty big. It won't. I don't think it is. It's a deal breaker. But you know what, guys? Nobody wants to see a drop of that kind of money, especially if you were smart enough to buy the bottom. You don't want to see a drop of $7,000. The only people who want to see a drop of $7,000 are those people who are too afraid to buy the blood. They're too afraid to buy the sale price because they don't know any better. It's amazing how many people jump into trading not knowing a single thing what to do other than follow a meme on crypto Twitter. That's crazy to think about that. Imagine your son or daughter gets sick and you know nothing about or better said, they need an operation and you know nothing about the medical field, let alone how to operate. And you say, you know what? It's okay. I got this. Let me jump on Twitter. There's got to be a doctor, somebody that I can follow on Twitter that can guide me along. This is what a lot of people are playing with, their life savings. I mean, you can't compare money to your children, but the point is the importance, or the better said, what's the word I'm looking for? The seriousness of what a lot of people do as far as putting their life savings in something like this because they want to strike it rich. They have no understanding. You're risking your livelihood. You're risking the livelihood of your family. And that's unfortunate. We see that in the 5 years that I've been in this space, I've heard some horrible horror stories that if you think I'm exaggerating, guys, it's sad. And I'm sure a lot of you guys have heard that. And those who haven't, hopefully won't live through it. So the point off before I went off on a rant is that I don't want to see a $7,000 drop. Could it happen? Yeah, it can. And here's a case for here's a good case for the bears, because there's always going to be bears. We could be at 60, at 70, at 80, at 90, regardless what the price is. There's always going to be those group of individuals, the pessimists, the one that see the dark side all the time, the one that always look for the negative, never the positive. There's always those people. They will always see a reason for this to go down into a bear and back into a bear market. Very unlikely. But there is a case for the bears here. Look, we broke out, we hit resistance in this here at 48,000. We tried it for a few days, we got rejected. We tried it again and we broke out. However, this breakout was too clean of a breakout. And unfortunately, when we have these types of breakouts without a nice, slow organic growth, we tend to really test the resolve of the market. And what I mean by that is when we break out of a strong area of resistance, we typically want to back test it or consolidate before moving up. When we don't, we run the risk of coming back down. So what I mean by testing the resolve of the market means that now that we've broke through two very important areas of resistance with no back test, no confirmation, does the market have the resolve to hold a price action inside of this area here and not allow it to come back down to backtest? Backtest is something that's very normal and typically happens. It's not guaranteed. There has to be a very, very bullish momentum in the market, of sentiment in the market for us to keep the price here. And it's going to take a lot. I mean, Bitcoin coming from a week ago at 39,000 to 55,000 and holding and not coming down and doing any back tests, that takes a lot of volume. As much as I'm a bull, I don't know. I've seen this happen. I've seen it more often than not. First, I'm leaning towards a push to this 52.6 area here. Every exchange is going to vary just a little bit. So, 5,200, 52,600-ish, somewhere in there. It doesn't have to be exact, somewhere in here. And then if this doesn't hold, yes, the probability will be greater that we come down in here. However, here's something that could happen. I want you guys to look out for this. If we hold here, this is going to allow the EMAs to start catching up. And that's really good news, because the more EMAs that cross this line will give us an additional layer of support to keep us up here rather than pushing us down here. If you guys, when you guys learn my system, whether it's by joining my Discord or by just listening to me with these videos here, and you understand how important these EMAs are, what their function is, and how well they support and resist the price action, you will understand that statement a little bit more as time goes by and you learn my style of trading. So best case scenario, we come down here, we consolidate these EMAs, the 30, the 50, and the 100, break through this line, become backup in the event that this can't hold the price. I mean, today is Thursday, guys. We're going into the weekend. The weekend has low volume. So keeping Bitcoin up here is not ideal when we're coming into a weekend. So more than likely, unless there's something going on that we are not aware of. Now, remember, guys, when Bitcoin goes on those runs, it's typically fueled by something. And we're not smart enough to know what that is. We are not privy. We don't have preview to that. We don't, unfortunately, have our ears to the ground as far as the market makers are concerned. They know something's coming up. And let me give you an example. In 2017, we put in a $1 billion candle. I believe it was either August or September. We put a $1 billion volume candle. Do you know what that was, guys? That was the market makers, the institutions with the futures. And that run that we had didn't make sense to us, but they needed to control the market. They needed to tame Bitcoin. They even came out in the media and said, we're going to tame Bitcoin. And we all laughed. We all laughed. This guy, these people think they can tame, they can't tame Bitcoin. They don't own enough. Well, you know what? They brought it from 5,000 to 20,000. And guess what? They owned enough. They owned enough to control that bear market and to short it all the way down and to take all that money and put it in their pockets, while most of crypto Twitter was in disbelief. So when I see runs like this, logic tells me, okay, we got to come down here. We got to consolidate. EMAs come up. It's the weekend. We might dip below this line, but hopefully the 30 EMA or the 50 EMA can catch up in time to catch it. We're good. Some people are going to try to outsmart the market and say, well, if that's going to happen, shit, I'm going to sell right here and I'll just rebuy it back here. However, that's a dangerous game. Very, very dangerous game, because if we don't know what's going on in the background, what's to say that we don't pull one of these? Let me show you something. This is one of my favorite references, guys, because it's a very, very important lesson that a lot of people unfortunately learn the hard way. And let me tell you what that is. I switched to the weekly chart just to make it a little bit easier, but you know what? Let me just at least go to the daily. We'll split the difference. I just want to be able to, okay, right here. When we had that black swan event on May of 2020 of last year, and this just started going and going and going and going, a lot of people thought they were smarter and they said, wow, this is incredible. This is great. However, I'm going to wait for a pullback. BTC needs to put a nice 30%. She always does this, and she goes down 30%. I'm smarter than the market. I know better. I've been in crypto for X amount of years. 30%, I'm good. I'm patient. I'm fine. It went from 3,800 bucks to $42,000 before a 30% correction came in. And during this time, you would think, well, why didn't they just buy it when it crossed 5,000, 6,000, 7,000, 8,000? You know why, guys? Because again, people get into the mindset that they're smarter. The same way bears are stuck right now, this exact same way that you read the comments on the bears right now on Twitter, how they're cautiously optimistic and they're waiting for this to go down. They're going to get caught in the same reverse. This is the reverse of that. They think they know, they think they're smarter than the market. And what's going to happen, guys, is it's going to leave them behind, because it left people behind, because the higher it went, the harder it was to buy. If they didn't buy at 4,000, they didn't buy at 5,000, at 6,000, at 7,000, you think it's going to be easier to buy it at 9,000? At 9,000, they're already thinking, there's no way this is going to go. I'm too smart for this. It's got to come down. It just went up. It just went up a 3x. There's no way. It just went from, and guess what happened? It didn't go down. They weren't smarter. And if they waited for that 30% drop, they lost, they missed out on this entire drop, because this was basically 10 months later it came, 10 months later. And so what did it come? They could say, yeah, see, I knew it was going to happen, but what good does that do? If it happened at 41,000 and you were trying to buy it, you didn't buy it at 5,000, at 6,000, because your dumbass was too smart for the market. And no, you wanted to wait. Guys, the reason I bring this up is because the same thing is going to happen to the bears. Watch, just pay attention, guys. Journal this stuff. Journal the comments. People who are not in the market now and are waiting for that drop, they're going to miss out. They're going to see it at 50. Look, they already saw in a week's time, they saw it go from 39 to 44 to 47 to 50 to 55, and they still are cautious. Oh my Lord, it's incredible, right? That's the mindset. That's called bear PTSD. There's actually a clinical definition for what they have. It's bear PTSD. It's this, guys. Most people who think like that, unfortunately, is because of this, is because of what happened here. They lived through this. They saw this. They held. Their bags went underwater. They sold at a 90% loss. And they stood there for 3 years waiting for the next bull run. And then the next bull run comes, and they're so afraid. They have that PTSD that does not allow them to enjoy and play what's in front of them. You know, you can lead a horse to water, but you can't force him to drink. And it's so true. It's so true with crypto. I don't want to see anybody miss out. I'm not trying to make fun of them. I'm trying to open their eyes so they can realize, buddy, come on. And it's crazy because they will come up with they will see nothing but bearish market structure on the way up. They went from, well, this is a bear flag, to, well, this is a double top, to, okay, this is a double top, to, and they won't buy. They find every excuse to rationalize why they're not buying instead of looking at the very clear picture that is in front of them. Oh, well, them not buying, guys, if they have a bear listening, I'm sure I have many bears that are listening to me. Honestly, it doesn't affect me. I don't give a shit. It doesn't do nothing for me. I just hate listening to the stories of people who missed out. It's just as bad as losing money. Missing out and losing money are, to me, there's no different. You know why? Because they both carry one thing. What's the one thing that those two things have in common? Losing money and missing out. They carry regret. And regret, that's a motherfucker to live with. And guys, opportunities that we have in this space is once in a lifetime. Once in a lifetime. Many of you guys missed the internet.com. That was a once in a lifetime. We got blessed with a second chance. With a second chance. Very rarely in life do you get second chances like that. And now you're going to blow it. What other chance are you waiting for? Just think about that. I'm not trying to fill you up with hopium, guys. I just want you to be aware and play what's in front of you. Try not to listen to those. There's always going to be, there's accounts out there on Twitter. Again, you do your own research. Look at all the bear accounts and just go to their timeline and look at the last time they post. They'll only post when the market is going down. They'll never post when the market is going up. Those are miserable people. Those are people that live in their own misery and they want other people to join them. People that have nothing in their life other than just shit and misery, and they want people to join them. They don't want to see other people succeed. So they're going to try to mess with your head. They're going to try to keep you down at their miserable level, always thinking negative. You have a choice. You have a choice. You can turn those people off. You can turn off all that negativity. You can, I'm not telling you to listen to just one bias. Come up with a good argument why we are not going to continue to go up. Come up with a good argument and I'll be more than happy to listen to it. I've done my research. I've done my analysis. I've lived through this for 5 years. I have enough experience that I feel that the probability is on my side. Nothing is certain. I can't say I'm 100% certain because no one can say that. However, the probability is on my side. The data is on my side. The case for the bulls is much stronger than it is for the bears. So I hope this video touched one person, One person that has been missing out that will thank me 3 months from now and say, hey, BC, I was one of those ignorant bear PTSD guys. I listened to your video. I said, I'd rather listen to this guy who's been in it for 5 years than to listen to crypto Twitter. I got in, and because of you, I doubled, tripled, quadrupled my money. One quick point, guys. In a bull run, everything runs. The low cap coins, the shit coins, the really, really shit coins, they run harder. However, they also fall a lot harder. They're the highest risk. The risk is not during the bull run. The risk is when the bull run is over. When they drop, you will never catch it. You will never catch those shit coins. Do you know why? The liquidity is not there to support the time you need to get out. Does that make sense? If it doesn't, let me give you an example. Ethereum, where I have the majority of my portfolio in, because I've done my homework and just I don't want to get into it, but the majority of my portfolio has tens of billions of dollars in volume and the market cap. It's the second biggest coin. Now, for that coin to drop 90%, it's very unlikely it's going to happen overnight. You get into a shit coin that has a $5-6 million market cap, it doesn't take a lot to make that coin do a 10, 20, 30, 100x. When the people who get into those coins, they're going to take their profit. And when they take their profit, because of the low volume, they will drop it. They will put their order. Now, here's an example, just so you can understand dollar-wise. Just say a shit coin went from 1 penny to $10. Fucking incredible run, right? Incredible run. Went to $10. The market makers that bought it at a penny, the guys who've been accumulating that have tens of millions of dollars inside of that coin, when they sell, they're not selling at $10 because there's not enough liquidity. They're literally going to have to sacrifice about $2 or $3, or even more, actually, $4 or $5 to sell. If you don't understand that, go to any exchange. I use Binance. So if you go to Binance and you look at the order book, look at the green, at the buys. Because remember, when you're selling into the buys. Now, just use the smallest cap coin you can, the smallest one, and then look at Binance has a really cool feature that if you put your cursor over the orders, it'll tally up how many of those orders, how much those orders tally up to. So for instance, if you put your cursor and you go down, so say 10 orders to the downside that are buy orders, it'll tell you these buy orders are the equivalent of, I don't know, let's just say $10,000. So you do the math. If you had to unload $5 million or $10 million, how low do you have to go in order to get filled? So that $10 guy who's going to sell at $10 may have to go all the way to $6 to get filled. But you know what? He bought at a penny. He don't care. He knows. He's not stupid. He's going to dump it. And when he dumps that, what do you think is going to happen to all the stop loss triggers? You're going to see a cascade. And then when you see that cascade, other market makers are like, I'm out. And they dump it. And you know who's left holding the bag? Everybody listening to this video. You know why it's you guys and not the market makers? Because the market makers are too smart to be on Twitter. They don't listen to YouTube. They know what they're doing. They don't need a lesson. You guys need a lesson, which is why you're listening. So just keep that in mind. You're not smarter than them. If you were smarter than them, you wouldn't be listening here. You wouldn't be listening to Twitter. You wouldn't be on Twitter. You wouldn't even know who I am. So just always know your place. I know my place. And you know what? Knowing your place is going to help you. If you think for a moment that you're better or smarter than a market maker, you've already failed. Put it down. I don't care how much money you make in trading. I don't care how good you think you are with TA or Elliott waves or Bollinger Bands or Ichimoku Cloud. I don't give a shit if you have 100,000, 500,000 followers. You better know your place. Everybody has a place. And if you're on YouTube and if you're on Twitter, you're not there. And you know it. You may not want to hear it, but you may not be humble enough to know it, but I know it. But you know what I'm here for? I'm here to get the scraps. And that's okay. I'm here to get the scraps that the market makers leave behind. And that's okay with me. Because if you play it right, those scraps add up to a lot of money. I'm not at their level. I'm trying to be at their level. Of course, I'm going to have my goals, but I also know where my place is. So be careful in what you invest, guys. Be very, very careful, because when it comes to a bull run, guys, you want to do two things. This is your chance before we go into a bear market. You want to maximize your portfolio, but you also want to do it safely. What good is taking a portfolio 100x and end up with a 2x, or worse, end up breaking even? Because when those candles come down on those shit coins, you're not left with much. You're not left with much because you're not buying the bottoms. Remember, guys, you guys that are listening to me is because you don't know where to buy or where to sell. So you guys don't buy bottom. Don't bullshit me. You guys buy green candles and tops. So I already know, but when that shit coin drops, you're breaking even or underwater. So how do you protect yourselves? Choose wisely. There's a lot of good high market cap, high volume coins that'll give you that chance to get out. It'll give you, even if you have a stop loss, guys, that doesn't mean shit. A stop loss just says that you're telling the exchange, at this price, I want you to sell my order, and my order is at this price. It doesn't mean that it's going to get filled. In a cascade coming down in one of those big drops, if there's not enough buyers, sorry, you didn't get filled. You're up on top. You stayed up there. Your order stayed up there, didn't get filled. That happens a lot. And it happens a lot because people don't know how to step stop losses to begin with. They will put a stop loss. They will have a big bag of something, and they would say, I want the price to stop at $5, and I want you to sell my order at $4.99 or $4.98, and they've got 10,000 units, and they're playing with the shitcoin with low volume. Those who understand how to set stop losses, I know they're laughing with me, but it's not a laughing matter because a lot of people don't understand that. They don't have the education, the experience enough. They think simply by putting a stop loss, they're protected. And that is not the case. All right, guys, I've gone way, way over than I wanted to go. I just love this stuff, guys. I'm really passionate about what I do. Give my Discord a chance, guys. I do this 7 days a week. I teach people how to make money. I share my trades. We're a big community of like-minded individuals that like to help each other. We're a big family. We're a big family to support each other, help each other, do research, to trade together. It's awesome. Try it out. What's 1 month of your life to try it out? We're on 24 hours a day, 7 days a week, guys. So no matter what part of the world you're in, there's always a discussion going on. We have a lot of different rooms. I have a lot of free education on there. Come try it out. All right, guys, have a really good day. And I will talk to you guys soon.